Great and beautiful morning, afternoon, and evening to you, wherever you are joining me at this moment. I say welcome to 137 edition of Investdata Trading Academy live with Ambrose. Trading has a lot of things to do with your life. For that, freedom associated with trading, if you really want to take advantage of that freedom associated with trading, you need to put your stop loss, take away emotion, trade your plans, and what to reduce your risk, and at the same time to protect your capital. We can see that as we speak now, the global market continue to what to extend a bit of recovering from the shock we saw at the beginning of the week, and most of these markets across the globe are still in green as we speak now, which is also a good sign for the whole market. But I will tell you that as we speak, most of the sentiment in the market is also relatively also weak because of what? Because of what is happening as we speak. Stock markets across the globe opened higher on Thursday after mixed reaction and sentiment to the latest US inflation figure that was hotter than expected. This rebound, in few of these days, and especially in US market, shows that despite the mixed sentiment have continued before now, we have seen that from the worst session in 2 years we saw on the day of release of the figure, we have seen that this rebound is gradually coming back in the midst of what continued volatility and what expectation of a Fed meeting that is likely to hold next week. And until that meeting comes, I will tell you this oscillation we're seeing and the recovery also will keep this market either in a sideways movement in a good position, but that will confirm where the market is going across the globe too, as to speak, because that action of the Fed meeting will speak a lot for the global economy. You can see that there are some nations or some countries as we speak now because of high energy price, and all this also affecting their export, and all those are also putting the economy in a tight situation. We're not seeing economic expansion in most of the countries across the world. We're already seeing a slowdown in economic activities. That tells you that the world central banks continue rate hike is doing harm more than good, because if economy is slowing down, is that also will lead to a lot of activities that come after recession or kind of another positive thing. That is why as oil price continue to oscillate, investors also have to be very careful despite the seeming the seeming rebound we have seen in this market as we speak now. We want to also apply caution as traders and investors so that we won't be carried away with what we're seeing in the market. We need to apply caution, in this rebound market, because things have not changed, as expected. But investors' sentiment, for me, remain fragile or weak, just on the rising fear for recession. And that's why I said, it is time for the global or the central bank across the globe to also rethink, because continued rate hike won't do the economy any good, and that is why they need to also think twice. Oil price this hour to speak try to stabilize, but we are seeing a marginal pullback again. This hour to trade at 93.51 per barrel as we speak. As a result of what we are seeing that the fear of economic activities that are likely to slow down has also continued to slow down the price of oil. Don't forget that the China, which is the second largest economy, is still battling with the COVID-19 lockdown. U.S. economy is not here and there because of what technically they are in recession, and with more rate hike, if Fed also adjust the rate again with other 75%. Some are saying 100, but it depends. That also will tell you the kind of this fear, and most of the other also countries are still are struggling. That's the point that demand for oil is becoming weaker, and that also affect oil price. That's why we are seeing this oil price try to struggle below $100 now, after it has gone below 90, coming back again. These are the things we also should watch out, because we continue to drive the volatility or the oscillation we're seeing in every aspect of the market, in different instruments or windows. But as we speak now, it's a good news that US market or US indices are in green, extending the previous day session positive sentiment, while also in European market we are seeing that the market there has opened higher to kind of cut the earlier losses, they recorded this week. When they adjusted rate earlier, plus the data figure that came, inflation figure that came from US, that have put that market in red. But as we speak now, we are seeing that this morning the market in Europe, global markets are open higher, even when they were still seeing mixed economic data coming from UK, coming from Germany and all those support. The market there is also back in green at this hour, as we speak, which is also good. Why Asia and Africa remain mixed as we speak now, as NGS trade in the red, as all eyes are on Nigeria inflation figure data today. That is the MPI, CI, which is the consumer price index for today, for the month of August. All eyes are to see what the data look like. If that was also, if you remember, also yesterday was the primary market auction for Treasury bill. We saw a slight decline, in the long tenor of the of the curve, or the Treasury bill, that is 364 days, dropping from 10% to around 9.75, but that's about 25 basic point down. But why the 180 rate remain around 6, that will move up to 6%, and for 90 days remain flat at 5%. I can see that as we're also expecting inflation data forecast from different analysts, different research houses. Some are forecasting 22 point, some are saying 20.5. We're seeing different forecasts, but when the data hits the market today, that will also inform what will cause the market, because as we speak, the financial market in Nigeria is slowing down in expectation of this data, and also looking out for MPC meeting that is coming to next. That's why as market continue to side trend, I believe that this side trend will continue even until after the MPC meeting. Today, I see that market is dull. Look at the activities on the exchange. I will tell you that market is equally dull, because expectation is to see this data to inform decision where funds will flowing ahead of what the MPC meeting, because this data also is one of the major economic data that will inform the activities of the outcome or the voting pattern of the MPC member, and coming next week. For me, these are what we should look at, and investors should watch at it. If we are seeing that if you want to sacrifice growth for rate to attract foreign investor or whatever, to fight against the inflation, yes, inflation they can't cover, but if you further also that you're also going to increase hit on the economy, because cost of fund, well, let's see how it go, because we have done it successfully for two MPC meetings. Let's see the third one. If don't forget that this MPC meeting or the Mefele style, before it took them time to read it, it took them many years to read it. But now they started adjustment and see we don't know what will happen again in the next meeting. But we need to also look at this and look at the economy. If you look at the growth recorded in the Q2, it's not too fantastic for them to say that alone. But also we're seeing some focus coming from different research firm or organization that yes, we would like to see a 4% growth in 2023, and 2023, that will be how successful the election that is that we are in already, preparing for what will go, and at the same time who also will win to come with reforms that will support that growth of 4%. If that is achieved, good, but we need to usher ourselves into that. That means if we want to maintain this trajectory we are seeing in economic recovery, I think we should look at how to encourage what the private sector, the manufacturing sector, and activities around you. And also, like I said last time, that this is the time for us to look outside the MPC meeting if we can address the insecurity in the system, and also become prudent and look at our policy that need to be refined, need to adjust. Then that will help us to move toward that achievement of the 4% focus we're seeing for Monday for 2023. But as we speak now, the market is trending, and this is a lot of what information that is also flowing in the market as we speak now. Yes, before we go into looking at the result that came to the market and market information, I want to really look at our lectures for today. Like yesterday, we were talking about the chart pattern, but today I'll tell you that stock prices move in waves and in pattern. And before taking any trading decision or position, you need to know it is very important for you to know that where is the general market moving, or the sector that you want to, what is the general position of that sector. That will help you to know exactly what to do, because the purpose of looking at the chart in in any market or for any trading is for you to know when to buy and when to sell, because the chart will tell you the pattern of people that are in the market, the attitude they are displaying. So that you need to look at this before you can also conclude what to do. Either you are doing a trend analysis, probability, to find a a good position, also to manage your portfolio, to manage your risk. Chart will help you to see where to end in, and that is why like I tell you that in technical analysis you must know how to work to look at your price action, and that price action will also help you to know exactly what to do when you are trading. Because no matter the instrument you are trading, there's what is guiding you to know exactly. Because all eyes in in technical analysis or in the market is for you to read where is everybody looking at, either to take position or to sell out. That is why if really you are using your chart pattern, you should understand the volume is supporting at that particular time and what is happening, and also what is the price position. And that is why candlestick or price action is very, very important. You need to know different candle come with different word, interpretation, to know whether it's a sell candlestick when you see full red, whether it's a green one, whether it's a hammer, whether it's a reversal. You see all this that, and then you are looking at to see what is the momentum. Momentum here comes in two ways. Momentum combined with price. That is where you are looking at what the money flow index. Also, you want to look at RSI. RSI is not looking at the volume. It's not looking at the momentum. It's just looking at what we call velocity. To look at that for RSI. You need to understand what the momentum you are looking at is telling you, because that will help you to know it, and what place or what point will you see that general market is waiting to react. You know that in a chart reading, when we look at 50 days moving average, is purely what institutional investors what the I call it institutional investor indicator. Because when you see that the market is above that region, see that the institutional investors are in place. Also, if market is also coming down from up, if you touch that, you want to show whether to break out, to more form will come. Because if it is below, you can't see the market, the institutional players in that market. But if markets are above before you see them playing, we should assume that at that point, everybody is looking at that moving average. And that is why for me, using your T line, which is also the moving average exponential 8, which is also a property of Fibonacci instrument, it will help you to know whether you are to enter a long trade or not. And that also help you to know what to do exactly when you are trading, because you know when to hold, when to sell, and when to, because whenever you see that your prices or index action is above the T line, yes, you can also think of holding. Once it's below, you can also off your trade, like sell off, full cash. When you see it coming back again, and also don't forget I've said in the class that the far you see the price in the upper door, far from the T line, it's a sign that profit taking for you. In that, if also it is farther down, or no far from it, also there that rebound is also on that way, because the more the price action or index action go far away from the T line, it's a sign that decision is about to take. When it's about going far from on the up, when it is on top of the T line, you know that profit taking. That is why at that time you know what to do. But once you see also is down and remain down for a while, and also you see that it's going far from the T line, it gives you an information that yes, at that time something is about to happen. As we speak now, you can see that the T line, for all this while, as because markets are trending, market is ranging. T line are also moving the same. That at that time, you are waiting for a confirmation. Market is waiting for a trigger, and that trigger will come today as all eyes and what on the CPI data or report that will come from Bureau of Statistics. These are the things that will shape the market as we speak now. And also, you don't forget that when you are trading, because the price action is very important, you need to understand the circle, the price cycle or the price phases. In technical analysis, what we call a price word consolidation is very, very key. At this point now, we on this chart now, if you look at this point from here to here, you can see this is a consolidation state of the market. Once from here to here, once it break it out, that is what we call price expansion. At this point, you can see it from here to here now. That is what consolidation. From here, the price is consolidating at this point, because price has four phases. We have the consolidation phase, we have the expansion phase, we have the pullback or retracement, and also the reversal. These phases will also appear, but it's a candlestick that will tell you, and also what you are using also as a technician to know exactly what is happening. If at this point here now, we are seeing from here to here, let me see if there's a instrument to draw that now. Okay, let me quickly call up another thing that will help us, for example now. Okay, let's hear. Okay, this is another pattern price action for you to look at. This is structure here, price structure. But if you look at from here to here, it's like the market is oscillating. It has not gone below this point. You can see it here. But this for this price now, this for the index action. You can see that yesterday market was in red, but you can see if you look at this point and this point, you see this market is also forming what? A double, a double bottom at this point. But you need to confirm that it's like a reversal what? A reversal pattern in that. But you need to look at what volume. You look at the volume here. It's a high volume that the market is down. For you to grow, there must be another strong volume that will come up like for you to say this is a reversal pattern. But if you look at these two here, here and here, because of the point where to the it's also forming what we call a what? A double bottom, a reversal chart pattern. But if you also draw a line from here, here, it's also what we call a descending what? Triangle. These are the things that I want to look at. But from this point here, or take it from here to here, at this thing now, this also, because market has not broken down this level or above. But at this point, if the market does go out from here and break out from this level, for example, let me just draw this, okay, let me take this one here. For example, now, from here to this point here, okay, this point here. Yeah. And here, this, let's say, assume from here to here is the consolidation level. But once markets start going up and break out here, that is what we call say price expansion. But if also getting up here a reverse, that is the reversal cycle of the bank. And as it consolidates at this point, it's either it it continues down trend or it goes up. When it goes up, that's expansion. When it comes down, that's pullback. Also, when it pull back, and that's what retracement phase. But reversal is when it's going at a force and now fall back. For example, it went down here and also before you go, that is a pure reversal in price. These are the things you should also note when if you're looking at this movement, you're looking at the volume at that particular time to give you the information on what to do. But this is what you really want to know when you are trading, because price and or the chart action is telling you exactly what is happening, and you must know exactly how to use it so that you can make information. The candlestick help you to what? To make informed decision as a trader or investor. Are the overbought or are the oversold area or zone, whatever you call it, whether to sell or buy? As you're looking at the price action, the candlestick, you are at the same time looking at what? At the same time looking at the volume, also looking at the momentum behind that volume. Are you seeing no fund entering that stock? You will know, because if, for example, you see a market that want to bounce up and there's no volume, no, and it continue to drag with volume, that might not be a good sign that the market is about, or the stocks are about to rebound. But when you see a stock at the level of either 50 days moving average, at that point you want to break out, you see a volume, it's about that fund is coming back, because that time where you see this investor want to take position. But as we speak now, markets are trending in our own market for us to also watch to see where market will go from here. Because as we speak, this time market is telling us that it's waiting for what? A trigger. And I told you earlier that market will always make an uptrend if at the end of the month of September, which we the end of the quarter, and in October start seeing results, that was also for when the market will go. As we speak now, the low liquidity in the market because of the institutional investors are not playing the market as to rather they are not taking position. You can see that the market is dry because volume have reviewed that before now. But as we speak now, we know that we're starting seeing companies releasing forecast for for their third quarter, for the last quarter of the year, and also the company also are also releasing kind of what we call a close period for their third quarter result for coming in October. It's either that third quarter earnings result or reporting season is also around the corner to help you know how to plan your trade. Because I believe that earnings has a way of changing the face of the market, especially now we're seeing that inflation is on the outside. Where can you hedge against hedge against inflation? It's only some stocks and some other instruments like real estate backed commodity in stock, and also commodity backed stocks that you're able to pass their cost to consumers, and earnings continue to look positive. That will support the price and also support the payout at the end of the day. But as before we go further into looking at the market live chart, we want to look at the result that were released late, after market has closed yesterday from Access. I'll tell you that the number that came from Access is below market expectation. Yeah, despite that it's not a bad number and not totally, but this the number is not what the market was expecting, and that's why I believe that market should also treat assets the way it is until you find a stable place. That's why you as a trader, I tell you this information. You need to look at the candlestick and see what is happening in these companies for you to know exactly what to do. The number came on a missed direction, or yes, not the missed direction. It is below expectation I've said earlier. But the good thing is that there's prospect, because we saw that look at the period they are comparing with, that we have a restated account for what they said are compared with the actual, and also this is the first one we're seeing coming from the group at this period that they are paying into dividend. Because what I say is miss result of below expectation for them to kind of step down with ten kobo with their interest didn't pay out, says that the number is flat, and you can see for yourself as you look at what the state of the numbers that were released. If you look at the Access Bank gross earnings for the period that ended June 30th for 2022, yes, it's good that their top line, which I know that they sustain it for a good time, that the top line hit 591.8 billion, from 450.3 billion, which are about 31% of for top line. Good one. But if you look at the bottom line, I told you, if you also look at the assets, interest income for this period, you can see that, or less, because they this interest account, you can see that it's even their interest income was even flat also. Even when their expenses has increased, their interest income, even collection and all those stuff, are also decreased from the figure that were released. It tells you that either the impact of the rate has not reflect more on assets, or because of the expansion, we can't really say, but we want to look forward to see their Q3 number to give us more information to know exactly. We are seeing others in that industry that their interest income are looking up, but for Access Bank, the interest income is not looking up. For me, we'll say that yes, they've done well. But that's why I said this number from Access are really missed. But for those that are in Access Bank, don't need to panic. Yes, you can, because of market, but don't wait to see where the market will drop it to. That's where that new position will be taken ahead of what their Q3. We believe that this Q3 with rate increase, to see it reflecting on what on Access number, but we need to also hear from them on their conference call to know why this also happened. But Access with the top line shows that they are going places, because as more we are eating into market, we want able to take off their this expansion move they are doing. We expect to see a better world, a better bottom line that will support what a stronger payout. When they changed their movement last year from 20 kobo, 25 kobo to no to 25 kobo to 30 kobo, everyone was happy. But now from 30 kobo to 20 kobo, no, it's not a good news for the bank that they have rethink. But as we speak, the PAT moved from 86.82 billion to 88.87 billion, about 2.2% up. Yet in that direction, we saw that the earning per share also inch up from 2 naira 48 to 2 naira 52 kobo, good for the period. But you can see that with that, you can see on the strength of this 2 naira 52 kobo, can also easily forecast that we expect 5 naira 50 kobo at the end of the day, or even 580 if we see better Q3 and also Q3 and the final result at the end of the year. But with this, we can forecast, and that if on the trend they want to make 5 naira, we know that they are expanding, because Access as the two category, a growth stock, value stock, and it's also a stock that has this category. We tell you, when there is high interest, the growth stock, most times don't pay dividend because it costs them. But now this is a stock that also we expect that interest rate will also impact them, and also having a value, we expect that they will also pay out to maintain that position of a good company. Because if you are forecasting to have about 5 naira or even 5 naira 50 by the end of the day, we expect nothing less than 2 naira or should come out for you to reward your goal. But on the strength of this 20 kobo, where we don't know what they're going to pay at the end of the day, is that they're going to pay 1 naira 20 kobo to make 140? Are they still going to pay 1 naira to make it 1 naira 20 kobo? It depends. If that comes, that will also shape the price of Access Bank. But Access has value. For what we're seeing expanding to Africa country, we expect that when it starts also reflecting on their numbers, to show a better number. If you look at also the profit margin for Access for this period, it dropped from 19.28% to 14.99%. It's almost like 15%. You can see, it reflect the cost that involved of them to attain that 591 point. You can see that the cost also is very obvious here, increase in this and all those stuff. Also, the interim dividend I've said earlier dropped from 30 kobo the previous year to 20 kobo. That is sweet. These are the numbers from Access, and that also will shape market reaction to the Access today and tomorrow. And also, you can see that their markdown date for the action, corporate action, is at 28, 29 of September. Payment day around 12th of October. We need to also look at this. Where are you doing? What are you doing with this cost stock? For me, it's a stock that you can wait and watch. But we pray that the number was not too attractive, not too impressive. Like I said, missed number and not below market expectation. But we believe that going to the fourth, you can see improvement from Access, knowing that the banking sector, which others have reflected that this hike in rates should also have a way of impacting them, knowing that the treasury bill, where the treasury market where they play, we're seeing improvement from almost about 1 naira 50 kobo, 1 naira 80 kobo to almost 10 naira before little adjustment in the last option yesterday. I believe that that sector should also post a good number. But as we speak now, we want to look at the chart as we speak, that what is happening in the market. I said it earlier at the beginning that our market is slightly in red. As we speak now, activity in the market is still up. However, the market is trading 49,547.03. Then the market is down by 29.02. That means it's present about 0.06% down as we speak now. That is almost, you can say, 0.1 no percent, 0.6, 0.06, almost 0.1%. That is what we can say. But if you look at the market red is in red because we're having 9 losers against 3 gainers as we speak now. In the 9 losers, you can see that the life of Vitafoam is still here, leading the pack there, followed by Access Corp. We're not surprised. Also look at the Charms, and the Charms is profit taking, move from around as low as 22 kobo to almost 33 kobo. Coming down now, I'm not surprised. You can see the life of Human Bank on that, and also Transcorp. These are the top 5 losers as we speak. But if you go to the flip side, which is the gainers chart, you can see that it's very few. Have 3 gainers as we speak, or less. That's the case. But at this hour, we're seeing NACO leading, followed by Fidelity and Zenith Bank. But in terms of volume, we're seeing Codv Business Solution topping that list, followed by Access Corp and Zenith Bank, Transcorp, and Vitafoam in that regard. But before we want to look at the chart of Transcorp, look at Access Bank, look at Zenith Bank, look at Vitafoam also losing, and also look at Asset that is also losing. What is this informing, and also what is also look at what is happening in Fidelity if time permits us. These are the ones we'll be looking at. Then also we can look at NACO. NACO coming back to lead at this hour. It's also we can also look at NACO if time permits us on this class. But let's quickly look at the market. If you look at the market again, as I've said, market is still on the side trend. You can see that it's moving. It's trying to, once market break out this consolidation at this point. Let me bring this so that we can see it here. This is the level. You can see now the market is making from here to here. You can see market has already broken down this layer to here that is forming here to here, and you can see now market is also confirming a downtrend already, and which we have seen on the trend as at market close yesterday that there's a change in trend, which market this one is also confirming it. Let's quickly bring out our T line. Sorry, I didn't call them up. Our T line, our indicators we're going to use for this class. We're using the money flow, looking at this number 8. Then we're looking at oscillator. So the ones for using this hour, and you can see from here that the market is still below the T line, far above the 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 index the T line, and that was to say that it's a sign for us to start taking profit. These are the things we should also have at the back of our mind. These are ways of also taking profit, also managing your position to know exactly when to buy and when to sell when you are in the market. This is for that. And you can see also that this morning, as I just said, as a change, it's been confirmed by what, by the money flow index. And see looking down now to read around 50. This was closed around 56 yesterday. I see it now, and money flow is already coming back to almost the oversold region. And so see confirmation here before we say that there's a change of trend already going to work. And today, in the economic data and the outcome of MPC meeting will shape where the market will go. But I believe the market will continue this kind of a sideways movement or a ranging market was seen until the outcome or the after MPC meeting to change the face of the market. And that's why you need to know how to apply. That's why I took you to that price formation to look at the price structure and know exactly what to do with the price. I will be also help of the volume to know exactly where to look at when you are investing. If you also look at the market, the offshore index on a 1 hour chart, you can see that yes, money flow is often below 20. You can see it here. Our market is still trending on the 1 hour stage. You can see it just slightly below what the T line. You can see it here. But quickly, while I look at what is happening, Access release results after market has closed yesterday. What is the state of Access now? With the poor payout, I would say for into the dividend. Let's look at what is happening there. You can see that this is a 1 hour chart. You can see for the last hours, you can see that it has continued to go down. You can see volume coming, money flow down. That's why you can see it's coming back to this region before it started making this move. You can see it from here. It's now coming down to that region to show that there's kind of exit sell off in the stock now because of the result. Were just they were just released yesterday. Reaction to that result. But let's quickly look at the 1 hour a day chart of Access Bank. You can see that it has broken down the T line. You can see it's trading below the T line now. This way it open. Look at where it is now on a high volume. Money flow has turned down. You can see it also on the wall. And this shows that yes, investors are really not happy with the result. That's why I said when you do well, market will appreciate you. Yes, there must be potential and prospect in the bank, but what they don't pay and the number shows that yes, investors have to return, and that is how you expect there must be reaction toward this kind of result, whether positive or negative, to show on the chart. You can already see what investors are doing toward the stock as we speak. The psychology and the sentiment, you can see it here in the in access. Yes, but for those that are income investor, dividend investor, you can see that at this point again, you can trade it here. Here is also a strong point. It's almost at 850. I can see there 850 here. If you break it out again, you're looking at this point. These are the things you need to watch, and whether you want to jump in to qualify for what for the 20 global and hold the end of the year. You want to know at this region since the markdown date is far to around 28, 29 of this month. That will be after the MPC meeting. For me, let's quickly look at the Zenith Bank that is trying to rebound, as we've seen, as I've, among the gainers at this hour we are discussing. Let's see what is happening in Zenith Bank. Is the rebound going to be sustained? You can see that Zenith Bank on a day chart remain below the T line. That means that every serious trader is waiting for a breakout here. For those that also they've marked down already, you are not going to qualify now. You want to buy at a good price. You want to confirm when but for those that are income investors that are long term, yes, can be looking at, because I think this is a major place you should look at. What price is here that stock that's around 18 naira, 18 something at the point of here. Because at this point you can equally see when it got, you can see what happened. The oscillator was at sold region before you can see it the rebound. So for now it's already below it. You have to also watch already. You are seeing the stochastic oscillator at oversold region. You need to look at which candle to show a reversal candles pattern, and also where the money is going. But also if you look at the money flow, you try to look up slightly or to confirm a breakout for the T line before we say yes, this is where the stock is going for Zenith Bank. Sorry, okay, back, yeah. Okay, let's quickly look at the Vital Foam at this hour now. What is happening with Vital Foam? The price continues to go down. Let's see what is happening there as we speak. What's happening in Vital Foam? Vital Foam on the day chart, you can see it has been below this point. You can see where it's coming down here. You can see what starts to get up to us here. Since then I try to go up. You can see that it's coming down, getting out of our sold region too. You need to watch money flow, try to see turn up. Look at this candlestick. You have to watch it and see very well until the end of the day. But as we speak, let's see if it's a trend at this point. Maintain this 20, 20. But today you can see that they are touch almost around the 19, 19, 1995. But let's still keep our finger crossed to see what the stock is doing here. That will help you also to know to take position, because the year end is closer. It's a good thing to look at it very well and see what you expect to take with the stock at this point. Nice for the stock. Let's look at 1 hour chart for Vital Foam. Vital Foam on 1 hour chart for me, you can see, like I said, you can see that it has turned green on 1 hour position. You can see that trying to start coming up. Money flow try to look up here. That's why as you are trading, look at the shorter time frame, that will give you what is the state, what is the attitude of people in the shorter time. And see in 1 hour, you can see clear. People are also taking advantage of that price. That means for that the stock will close above 20 naira today is high, depending on the fund that enter the stock as we speak now. Let's keep our finger crossed for Vital Foam. Then finally, let's look at what is happening in NACO. I see NACO is trying to rebound powerfully recent days. Let's see what is happening, what is the sentiment behind NACO. Just on the 1 hour chart, there's NACO, can see there's a green ball pulling back, that's not taking care of kind of engulf. There's no engulfment yet, that's not taking out what the market gained, in the last 1 hour. You can see it here. Also seeing the money flow looking up, and also already the oscillator has given us sign of also weakness, even at showing that it's over. So it's done. When most time you want to look at what is happening at this return. Tested it here or this one. That is where it reverse. Also, that is where it is now trying to reverse again. You need to also watch very carefully. If you are in trade, look at your T line, see above the T line to see what time you have to confirm the next action of the candle, whether to jump. And this is what a 1 hour time frame. Let's look at a day time frame to give us a clear picture. Yes, as we speak, slightly above the T line in green here, still money flow. Yes, we are safe sign here. Yeah, we're slowly turning up good, but need also to confirm how far it will go from here. And this is where we stop for today class. Like I said earlier, in the previous class, you take advantage of the coming master class because you need to make your trading simple, and you won't be investing with with one leg in, one leg out, investing and be panicking. You need to invest and trade this market with confidence because trading also will lead to what freedom. If you really want freedom, in your life, and also to know that you are the one controlling your time and your activities. You are not running under 9 o'clock. You control your time, know what to do. You need to be at the master class so that you can take advantage of the knowledge and the stuff so that when you go back, you become a better trader and investor. That at the end of the day, you'll be panicking for not that you are not seeing. Whether people are looking at you know what to look to see where the direction of the market is going to assure you whether you are in the right position or not. Once you know what to look at, even when the market is people are panicking, you take advantage of the oscillation you are seeing or the movement of that panic also to enrich yourself and also to boost your work, to boost your bottom line in your portfolio. And this is what we're going to be sharing or discussing in the master class. We look forward to see you. Yes, also you can subscribe to our video, to our channel for more updates on the market. Yes, today we'll have it tomorrow. We'll also be posting another new one from the analyst hangout. Yeah, feel free to make comment on those videos. We want to share with you what you also want to contribute. Feel free and contribute and let us know, and also we can serve you better because we are there for you at any given time. I'll say thank you and enjoy the rest of your trading day. See you tomorrow, the last trading day of the week. Thank you and God bless you.